All right, we are back with another episode of the Real Estate Investing Club. It is a nice and rainy day here in sunny Seattle, Washington on a Friday, whatever day it is for you guys listening. I hope you're having a great day. Today we have David Sanford with us. He is an active duty service member who has built up a substantial real estate portfolio over the recent years, totaling 10 million in assets under management. So, David, I am super excited to have you here. Thanks for hopping on.
Yeah, likewise, Gabe. It's funny. I'm on the other side of the country here in Virginia, and it's still just another rainy day out here as well. So yeah,
Yeah.
same atmosphere. But yeah, I appreciate you having me on today.
Yeah, we're recording this February 17th, and I'm already looking forward to spring. You know, it's the February, March, those 2 months here in Seattle. You just got to keep pushing through because the clouds, they start to get to you.
Yeah,
I
I can
uh I,
imagine that.
I told you before we hopped on here, we like to start with stories. We like to hear how people got started in real estate. I'm sure you got a good one being active duty. So why don't you take us to the beginning? How'd you get started in real estate?
Yeah, so I got started in real estate. It was 2016. It was about the same time. I think as 90% of the other investors out there, they read Rich Dad Poor Dad and just got motivated from that. And so, um, yeah, so that book kind of sparked everything. It was 2016. I had just graduated college. My wife just graduated college. We already owned a small house that we just kind of bought as a starter house back in like 2012, but we were living there. So 2016 came around. We were making a little bit better money, so we decided to move and buy a nicer house. And it just happened to be perfect time. Like I said, I just read Rich Dad Poor Dad and a couple other books, and I got the motivation. So I was like, hey, let's see if we can rent this house out instead of selling it, and just see what kind of cash we can get for it, what kind of income. And yeah, that got everything started. And from there, we were like, this is pretty cool. And we just started scaling and just kind of growing the portfolio from there.
Nice, man. Yeah, and all you need is that first kind of model to follow. Once you can see that real estate works, you get that first property that starts bringing you money every single month. That really does light the fire for a lot of investors. And you're right, Rich Dad Poor Dad. That is, I mean, it was the start of my journey. I don't know how many people on this podcast have, at the very end of this, I'll ask you what book you recommend. So many people recommend Rich Dad Poor Dad because it's a good motivating book, and gives you a good outline. So I totally get that. You guys did have quite a hockey stick. I mean, 2016, that was the perfect time to get in. 2014, 2016, right when the market was really doing the massive upswing there. How did you go? You mentioned you bought that one house, you started renting it out, and at the end now you have $10 million assets under management. So how'd you go from that first house to where you are today?
Yeah, the classic BRRRR scenario. So, we got that first house, and it's funny because when we had that house, our mortgage was like $850, and I was like, I was like, I told the property manager, if I can get $1,000 a month, I'm happy. This was my first house. I didn't realize that's not enough spread, but it worked out really well. So they came out and looked at the property, and they were like, I think you can probably get like 1,300 for it. So of course I was like, I hopped on it. I was like, I was happy with 1,000. You think I can get 13? Let's do it. So we did that, and then a few months later, we realized like the cash flow we were getting off of it. So we started saving up our funds and saving up, and then we bought our first like true rental property. And like 2016, man, like you could still find like great properties on the MLS. So
Mm-hmm.
I found it on Zillow. I called up my friend whose wife was a realtor and asked if she could take us to the house to check it out. So we went and walked it, and I realized like it was a very simple cosmetic lift. So I just had to do like some paint, flooring, and um, I think I threw out some new lighting or something like that. But yeah, we bought that house for like 90,000. I put, maybe I did all the work myself, so maybe like 5,000 into the house, and then cash flowing then as well. Pretty nice cash flow on that one. And then from there, we just kind of kept saving up money, saving up money, buying. And then it was around like house number 6 or so is when I discovered BRRRR.
Mm.
So being military, we had to go to some schools sometimes. So I was sitting in the school for a while, and I had nothing to do other than just watch YouTube videos on my off time. So it was exciting, but that's, I discovered BRRRR. I think pretty large platform. It gives a lot of people motivation, but discovered BRRRR and learned what BRRRR was. So then I went back home. I talked to my loan officer, and he told me what a cash out refinance was. And then from there, I was like, okay, well, we've got all the pieces to the puzzle now, so let's really start scaling the business. And yeah, we refinanced a few houses, pulled out some cash, and then started raising capital and just started really doubling down on growing the portfolio.
All right. Yeah, the BRRRR method, I mean, it works really well. Pretty much any asset, I totally recommend following that method. For people who don't know, people who are new to real estate investing and they don't understand what BRRRR is, can you really quickly go over that method?
Yeah, I'm sure I might butcher the order of acronyms, everything, but yeah. So essentially, you buy the property. What I do, I usually raise capital to buy the property. Sometimes I'll put my own money in the deal, but really to scale the business, you really need to raise capital. So you buy the property. The next you rehab it. So like I said, the first deal I mentioned that just needed some paint and flooring. Um, so you do the rehab. You kind of force the value of the house to increase. Then you find somebody to rent it out. You start cash flowing. You go to the bank. You refinance it so that way you can pull the money out to pay back your investors or pay yourself back or however you funded the purchase. And then you just repeat the process and just keep going over and over again.
Yeah, I always forget what the R's mean. Like, how many R's are there? I know B is buy,
Yeah.
but after that, there's different varying definitions of what BRRRR is. But yeah, that's exactly that sounds like it's a great model. So many people use it in single family, but it can be used in commercial as well. Um, so how you mentioned you don't put your own money into these acquisitions, you raise capital. How do you structure those how do you structure the equity on when you buy these properties? Do you give equity away to the people you're raising capital from, or is it more of a loan? How do you structure the acquisitions?
I always structure it as a loan. I don't really do too many equity structures. I think it could be more profitable to the lender, possibly, but there's a lot more gamble in it. So, I'm more into like a loan structure. Where usually I give like 10, maybe 12% interest, and maybe a point or two up front, and just kind of structure it as more of a loan, just so it's like a quote safer investment for the lender there.
Yep, that makes sense. Awesome. And so you started with single family. Are you guys still doing single family today? Or, I mean, I know you have 75 doors right now. Are they all single family or have you moved on to multifamily?
Still in the single family world, man. I really want to scale into the commercial space. I actually last week, today's the 17th, so on February 9th, I closed my first commercial property.
Hmm.
Pretty sweet deal.
Congratulations.
Uh, Thank you, I appreciate it. It was I had to get really creative with it. I got the seller to carry a note, I got the bank to carry a note, and then I raised some capital from friends and just took it down. And it's a solid deal. So I think once I kind of got my foot in the water with this one, and I'm seeing like how much you can get a much larger return for almost the same amount of work, and it's the same principle, like you said. So
Yeah.
I think I'm going to start focusing a lot more heavily on that.
That is what I recommend to absolutely anybody who wants to get into real estate. Don't start with single family, but I'm not saying single family is bad. There's plenty of money in it. It's great returns, but you can really, you don't have to start there, and you put the exact same amount of work in a single family property that you do in a 100 unit. Not exact same, but it's comparable amount of work to a single family as a 100 unit multifamily. And so you might as well start big. That's
Yeah.
awesome that you guys are, you're in the multifamily game now. Since it's so fresh on your mind, why don't you run us through that deal? How'd you find it? How'd you finance it? What's the value add strategy that you guys are going in with?
So this one, it's doctor offices. It's not actually multifamily. It's a
Oh, okay.
commercial doctor offices. So back in September of 2022, last year, just a few months back, I went to this local mastermind meeting and just kind of met a lot of people that were in the commercial space, and it just really gave me the motivation. Like, I've done 75 deals or so. Like, I think I could probably step into the commercial world now. And it's kind of like that. I was really self-limiting prior to that.
Mm-hmm.
But I got the motivation, and then leaving that mastermind, I went and I just called dozens or a lot of different brokers and said, hey, I'm trying to tap into the commercial space. And of course, none of them took me serious because I hadn't done a deal yet. But luckily, one agent took me serious, and he started sending me deals. And it's funny. So this particular one, it's a commercial deal, but it was listed on the residential MLS. So
Mm.
it wasn't getting any eyes on it, and it's a solid deal. Like it's a solid 10 cap. So I purchased this one. So then I went and walked the property, and at first I thought it was just one commercial building that they were asking like 1.1 million for. So I went and walked it, and then the owner was like, "Hey, I've also got another one if you're interested in that too." Like just kind of dropped like, "Hey, just FYI."
That happens so
um,
often. Is just like just out of the woodwork, another property pops onto the table. It's amazing once you start getting into these deals what happens. So I love to hear that. Keep going. Sorry.
yeah, yeah, no, I mean, like the deal flow isn't going to come to you if you're not getting your name out there, and that's exactly what prime example here. So the other deal was a 1.5 million dollar deal, so it was a little bit bigger. But yeah, I told her, I was like, because the way they had it listed, like they weren't getting any traction, any offers, anything like that, and they were significantly discounted for what the rents, and they were triple net. So I mean, it
Oh,
was a home
yeah.
run. But yeah, so I was like, hey, like I would love to buy both, but like I need some help, some financial assistance. So I was like, I'll buy both from you. You're not getting any other offers. Like I'll pay you what you're asking, but I need you to carry 25% of that purchase. Um, so they did. They agreed, and we agreed at 2.5% interest on that 25% that they they went.
Wow. See, that is fantastic. How'd you get 2.5%? Was it, I mean, he owns commercial. He can't be an unsophisticated investor, right?
I think they just really wanted to offload it. When I
Yeah.
made
Okay.
my initial offer, honestly, I just said, hey, loan me 25%, no interest, 30-year amortization. Like I shot for the moon.
Oh, okay. Okay.
And then they came
Nice.
back and like, we need some interest. And I think they were like 4. And I was like, yeah, about 2.5, which I would have been cool with 4. But yeah, so we landed there.
That's funny. So office, no, not office. You said a medical office building. That is a very niche type of real estate. What prior knowledge did you kind of need to have to underwrite this? Take us a little bit through, underwriting medical office buildings.
Yeah, that's fun. So back in 2020, I enrolled in like a commercial, just how to analyze deals, how to find deals, all kind of commercial, different commercial assets. So I already had paid to have the training to learn how to underwrite these deals. So I think that was huge in this. It took me a couple years to step into the realm of the business commercial space, but having that training was super helpful. So yeah, we got the deal. They sent me the rent roll. They sent me the P&Ls and everything, and it was just like you guys should be asking so much more for this property. Like, it really was. I bought it for 2.6 million total, and I'm sure it's worth 3.5, maybe even close to 4 million if I were to just turn around and wholesale it or sell it. But I'm gonna hold on to this room for a while.
Nice. And is that in your local market, or is that in the market, a different market that you've been looking at?
Yeah, so it's two different office buildings. One is actually in the town that I grew up in, and the other one is just maybe 20 minutes south of it, right in central Virginia.
Perfect, man. I love that. Well, that's great to hear. I'm glad you're on the commercial side. It's a good place to be. I did take a peek at the clock. It looks like we're running it down. We do have to move on. So let's start out the quick question round with education. I'm a big bookie. It doesn't have to be books, but give me 2 recommendations: one for general life wisdom, and then one for real estate specific.
Yeah, yeah. I'm not going to give you the Rich Dad Poor Dad. Although I would say that it is my favorite real estate, or I guess it's not really even particularly real estate, but that is my favorite book. Because I kind of got everything started. But on the real estate side, I recently read. I read a lot of books, so usually my favorite is something I read recently. But Profit First for Real Estate
Mm,
Investors.
okay.
Everybody's heard of Profit First, but there's a spinoff for specific for real estate investors by David Richter. That was a really good book. And then for non-real estate related, I guess I would say I've been diving into Grant Cardone a lot lately.
Mm,
A lot of his like 10x Rule books and 10x Rule Mentor. I guess that's not very real estate specific. It's just kind of like overall motivation, business success type book.
nice. Yeah, I've heard of Profit First. I didn't know they had one specific for real estate. That would be sounds like a good read.
Yeah.
Moving us on, this is for your younger self. So let's go back to the David of 2016. He was just buying that first property. Go back to him, look him in the eye, give him one piece of advice moving forward.
I would say start networking, get your name out there. It's gonna bring deals to you, and it's gonna bring money to you. So just get your name out there however you can.
Solid advice. Start building those relationships. Real estate is a relationship business like every other business out there. So start talking to people, get your name out there, and eventually something's going to work. Moves us on to the next question. Every business is built on the people that work in it. So you don't have to say specific people, but what are the first three positions that you hired for in your business?
For me, the very first thing I did was I still have a full-time job in the military, so the very first person I hired was like a boots on ground person.
Hmm.
I had a lot of different projects going on, so I just need somebody to kind of be like a project manager, slash, like a kind of like lead generation, going to walk potential properties for me. That was my very first hire. From there, I hired a cold caller just to kind of up that deal flow. They had somebody boots on ground that can go and look at it a lot more frequent. And then my third person is just like an administrative assistant, basically kind of help keep track of the books and keep track of everything.
Perfect, man. I love it. And would you change the order or add a different one in, or are you pretty satisfied with those positions?
So the boots on ground guy, he's doing everything. He's running materials. He's looking at potential properties. He's doing project management, meeting contractors and getting bids. I think I need to kind of split that off and hire another person that just one solely focuses on the acquisition and one solely focuses on current projects.
Yep, that makes sense.
Mm-hmm.
All right, next one is about the US. It's a big place. There's a lot of opportunity out there. So give me one metro you're most excited about investing in today.
So recently, I've been looking in the single family world, right? But a lot into like the Roanoke area of Virginia,
Mm-hmm.
um, right around Virginia Tech. My sister-in-law goes there for college at Virginia Tech. So, but that area right there, that the home price to rent ratio is far better than where it is where I am here in like the Richmond market of Virginia.
Okay, perfect. All right, that leads us to the next one. I lost my spot here. There we go. It all starts with lead gen. Every time, every real estate deal starts with actually finding that deal. So, what is your favorite way to find good deals in today's market?
My favorite way is wholesalers. Like I said, I do cold calling and things like that, but wholesalers, it's already, it's a motivated lead. You know what you're paying for it. It's just, does it work or not? And typically those are, they're going to be discounted to where, numbers that you like to purchase at. So wholesalers is definitely my favorite way to get the leads in.
There you go. And that's another reason to start getting your name out there, networking with other wholesalers is they bring you the leads. And the same on the commercial side, there's wholesalers and there's brokers. So get out there, start talking to people. Leads us to the next question. This is about mentors. None of us are islands. We all stand on the shoulders of giants. So who is one mentor who has contributed significantly to your career today?
He does not get his name out there, ironically, but it's a guy named Nathan Knuckles. He's up here in the Richmond, Virginia market. He's been extremely helpful. I started, like I said in the beginning of the episode, I started just by watching YouTube videos and try to like self-educate. But Nathan's really helped me kind of. He's the mentor that I wish I had 5 years ago. He's great.
Awesome. Well, thank you, Nathan, for helping David get to where he is today. That leads us to the second to last question. This is about strengths. We are all gifted with strengths that we uniquely provide this world. So, what is your Superman strength?
Ooh, I would say kind of multitasking, the ability to kind of handle everything. I'm running a very successful real estate business. I've got a full-time job. I've got a wife, 3 kids. So just juggling time management has probably been my my best suited trait, I would say.
Yeah, it sounds like you definitely have a full plate on your hands. That's for sure. 3 kids too.
Yeah, definitely.
And that leads us to the very last question. You've given us a lot of good advice, a lot of things to think about. I'm sure people want to reach out. What does your company offer? And then how can listeners get in contact with you?
Yeah, brand new to social media. I just recently started publishing or pushing out a lot of different informative posts on like Instagram, TikTok, and everything. So you can find me on Instagram. I'm at Deal with David. TikTok, Deal with David Sanford. I'm on LinkedIn, David Sanford. And you can kind of find me on every platform. But yeah, I mean, I'm not really pitching anything. I'm here to help kind of give some motivation. So if anybody ever just wants to talk real estate, like I'm obsessed with it, I'll talk more than you want to talk. So just feel free to reach out.
Cool. That is Deal with David. I will put his Facebook, Instagram, LinkedIn, Twitter, all that jazz. Going to put it in the show notes. So if y'all want to reach out to David and talk shop, go ahead and click a little more in the description. It'll pull down the full description, and in there you can find David's links. All right, man, that wraps it up. Again, thank you very much for hopping on the show.
Yeah, appreciate it, Gabe. Thanks.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. If you guys have any questions whatsoever, reach out to me, Gabe, at therealestateinvestingclub.com. And if you guys want to support the show, all we ask is that you give us a like, subscribe, share, all that jazz. It's the best way to support us. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.